Ladies and gentlemen of the crypto space, we're live at 11:47 a.m. on a Friday, March 19th. The SLR rule is going to expire on the 31st. We know the inflationists and deflationists and what the legacy financial folks are thinking. And basically, that just translates to volatility. Basically, we could either have a deflationary implosion or somehow miraculously things remain to inflating in the short term. I don't want to get into that debate right now. We could think long term, we could prepare for long term, but in the end, we got price action on a daily basis. And we're not applying our value to the legacy financial space, to equities with DeFi. And particularly, we're in and out. We can make transactions. We can have an asset, and 30 seconds later, we cannot have an asset. There's no cash settlement, there's no nothing. There's none of the policy and procedure and complexity that exists in the legacy system. So we could make radical portfolio changes in extremely short periods of time. Literally, hour to hour, we go from bearish to bullish and bullish to bearish and back again, rinse and repeat. Day before yesterday, everything was bullish. We broke below some serious long-term or relatively large trend formations. Anyway, let me get up the charts. A yield-starved world meets a demand surge, and that's exactly what I'm seeing. And I got something that really caught my eye that is quite interesting, and I'm going to go over that. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social good. Stop depositing on exchanges, not your keys, not your crypto, non-custodial, DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in the stream. Got RR in the house, Mr. Weeby. Always a pleasure. Folks are filtering in. 15 people on the stream, 7 likes. We can do better. I got Bitcoin up on the screen. We're on the 4 hour, and we breached below some what I thought was a meaningful support line. I don't have it drawn anymore because it's basically entirely invalidated by this action below the guppies over here. But incredibly, we're still above the 100 SMA and the 4 hour, above the 200 SMA and the 200 EMA. The oscillators look extremely strong. It'd be nice if the MACD bars were a little bit more consistent, but generally speaking, the Stoke looks like it has potential for an upward surge. RSI is in a good position for significant upward movement if the market actually wants it. We're above the 50 SMA, if you can see the green line behind the guppies over there. And this is a heck of a position to be in for Bitcoin on a Friday, considering the long-term moving averages and the oscillators. Ethereum, on the other hand, looks a bit under pressure. We're on the daily, and oscillators are downward sloping. MACD looks like it wants a bearish cross, descending bars. RSI looks strong, but Stoke does not impart the same sentiment. And the fact that it was a clear couple of touch points on this symmetric triangle, ascending triangle, something like that, but it was a break to the downside. On a positive note, we're above the guppies on the daily, and it held. So that is interesting to see. So maybe the trend formation isn't what's most not what isn't what's most pertinent from a technical perspective, and that's meaningful. I'm out of Ethereum at the moment. I could be in Ethereum in about 15 seconds with a transaction. What I do is something like this. It breaks to the upside, yay! You wait for a pullback, and then you wait for the higher high. Glorious payday. Grab 5, 10 grand, call it a day. That's how you do it. I wait for it to go up, and that's what I did for 1 inch. I think I snagged right around here, 84.93. I was looking for a breach of yesterday's high. Actually, I think I maybe snagged a little bit higher. I was looking for a breach of this to the upside, but this is a big cup and handle. This has me quite excited. I have a large position allocated to this right now, um, that I threw in a stablecoin paired LP position for dollar stability. I love 1 inch, but I want my dollar stability. So if there's downside price action, the stablecoin pairing will be protective of the dollar valuation. It will mute the downside. It will also mute the upside. Whoopie do. Not greedy. And I'm also getting 160% yield because it's the 1-inch liquidity farming pool that they just launched yesterday, which has another 28 days remaining at what probably be over 100%. So that'd be nice. So if this breaks out and it goes 50%, what be do if it comes down 20%? You're already in 50% in the clear at that point, and you just let it ride up and down, getting those LP gains. It's like 20% a year plus the incentivized yield. And then all said and done, you could exit the position. You have the incentivized yield just sitting around. It's pure profit. And the rest of it goes into Aave, and you could rethink how to position yourself for a next opportunity. But this looks really good. Do your own due diligence, assess your own risk tolerance, and extend proper position sizing. But this is a heck of a cup and handle. Stoke looks primed. RSI looks primed. I mean, when's the last time it was above 70? The dotted line was, oh, look at that price action. I mean, seriously, the last time it was above 70, it ripped. No, don't move that. Scroll, please. It ripped 400%. You can barely see the percentage from here. But the last time it ripped above 70 in the RSI, it ripped 400% to the upside. 400% to the upside from where we are, and happy camper. I'll let it drop 50%. Whoopie do. I'll still be up 200%. And then I'll let the LP position with the incentivized yield run out for the month. Happy, happy, joy, joy. Who else is in the stream? We got Wave in the house. Ryan's in the house. Good morning, Noah. Wondering if you heard about float protocol. Have not heard about it. There's one protocol that has caught my eye this morning, and we'll go over it. Trevor Van Meter. Chris is in the house. John is in the house. ERN, yes. Gavortex, good to be here. Best thing to do with vent. To vent? Oh, VB&T. I do nothing. I don't think it's stable enough for my interest. The vortex is going to bump up its value, which is exactly why I wouldn't want to liquidate it right now. Because if it's going to go up in value, it's going to be more expensive to recuperate. It's just something I'm going to let sit and let the protocol mature. Just because something's hot, just because something's awesome, doesn't mean action should be taken. Which is very consistent with my methodology that I want something to go up 50% before I even touch it. I want it to be above a long-term moving average. And that's exactly what happened this morning with 1-inch. Broke above the 200 SMA as well as the 200 EMA. And this is exactly what I was looking for. I don't want it down here, boys and girls. I don't want it down here. That's too much risk. I want it to break up, and I want it above critical areas of resistance. How about that? Year-end thoughts on Orion? Cool. I like Orion. It's not on my radar for a position, but they definitely have my eye. So, food for thought. I think the concept of consolidating centralized exchanges and decentralized exchanges and merging all of that experience into a single presentation is extraordinarily viable. Um, with regard to the Orion asset, that thing's been appreciating. It's not something I'm interested in taking in a position right now. William, what's up? Montana, VBNT supposedly going to peg to 1-to-1. There you go. When the burn component's in, it should peg 1-to-1 with BNT. That'd be nice. That's the goal. That's what we all would like to see. Before making play, need the legitimacy of a trend. Yes, that is a valid statement. Um, um, trends don't always play out according to expectation. But to me, this type of trend right here just feels it's sitting under this resistance. This red line right here, this little red line, that's a heck of a red line, guys. So, only you guys can make those decisions in that regard until obviously I have a financial advisor's license, and then we could set up arrangements and I could do all that fancy services and whatnot. But this is a position where you apply appropriate position sizing. You consider your risk. What happens if it falls back down? 10, 15, 20% bounces off the 200 EMA. That's going to impart some serious emotional effects. That's a lot of money to lose, 10, 15, 20%. So how do you handle that? What do you do when you're stressed that you put in 5 grand and it's down to $1,000 in a matter of a couple hours? The market flips, the market dips, the market tanks. Right now the market looks pretty stable. It's trending horizontal. Things could easily have a bullish breakout. I mean, there's always assets that are outperforming. Let's do the 24-hour sort. Plenty of assets are outperforming. It's not necessarily DeFi assets at the moment. Oh, legacy UTXO assets. Good to see Sia Coin up there over $1 billion. Haven't seen that bad boy in a better part of 2, 3 years at this point. Avalanche is doing pretty nice at 5.2%, and there's your 1 inch at 5%, one of the top gainers for the day. Phantom's good to see. Cross chain is going to be seamless. Polkadot's going to be seamless. Polkadot's now more valuable than XRP. UMA, big deal. Polygon, old school Matic. 2 bill. Uniswap. I mean, seriously, look at the top 10. Look at the top 10. Tell me you didn't see this thing coming. You got Bitcoin, Ethereum, BNB, Cardano, Polkadot. Tether doesn't count. It basically goes. And Uniswap is right behind XRP. When Uniswap passes XRP, and then Cosmos is up there at like 7, 6, or whatever it's going to find itself at, and then Phantom gets up there, and then Elron gets up there. And what else? Solana maybe gets up there. And the top 10 is all smart contract platforms that have a capacity to facilitate DeFi operations. Is that going to make sense or what? You're talking about monetary velocity in a world where monetary velocity is collapsing, yields are non existent, and you're faced with the emergence of an ascent system where monetary velocity is vertical. The capacity to borrow is permissionless, and the yields are extraordinary because of the demand. Now, the yields will get diluted over time, but that doesn't matter. People say, I'm not going to invest in this because it's 30% yield, and how long is this going to last? It's not sustainable. That's exactly the point. That's exactly the point. It's not going to be available. It's going to get diluted, and the opportunity is now. The opportunity also needs to be treated with respect and risk management and insurance using Nexus Mutual and Armor Finance. And then you can apply value to these types of protocols. Whoop, whoop. Yes. Johnny says, hey, Noah, can you tell us about CVP? Now we're talking. This has caught my eye. Folks throw around stuff at me all the time. Random protocol here, random protocol there. Yeah, see, stuff doesn't catch my interest. Like if someone told me about Yearn, like before it started, stuff like that catches my interest. Intelligence, brains, not necessarily pretty images and companies and products. What catches my interest is a project that is sophisticated, intelligent, and associated with serious market actors. Now, Power Play it reminds me of Alchemix, reminds me of Yearn. They have relationships. I mean, Andre and Badtag, I believe, are on the multi-sig. Now, this catches my eye, particularly the Yearn Lazy Ape. This is cool stuff. And it's only got less than 600 grand, and another 500K are going to get minted in 4 hours. And to top it all off, there's 178% yield right now going on the on-send pool on Sushi. So that's a no-brainer. So I've allocated a certain amount of value, a little bit of value. I'm going to mint in 4.5 hours. I'll get YLA. I'll take that over to Sushi Swap. I'll dump it in with USDC into the on-send pool. YLA is basically $1 because it's backed by the coolest assets in the crypto space. It's backed by Yearn Vault tokens. And these tokens are backed by Curve LP tokens. And Curve LP tokens for those pools are dollars. They're equivalent to dollars value wise. So, if you're nervous, you go over to ArmorFi and you get a Curve contract, you get a Yearn contract, and maybe they have a Power Pool contract, Power Index contract. So you get a Power Index contract. And then if you want, you get a damn sushi contract. You get an insurance contract. But frankly, Curve, de-risked in my opinion. Yearn, hundreds of millions of dollars in these vaults. De-risked in my opinion. Sushi Swap, billions in TVL. De-risked in my opinion. Power Index, small. But affiliated, working with, and involved with the brains, the smartest people in this space. So while it's not entirely de-risked because it's a relatively new protocol, and it's sophisticated. This is some sophisticated stuff going on right here. This is probably one of the most sophisticated layered contracts you could think of. So there's risk. You go over to ArmorFi, you get a contract. For me, I'd probably get a contract on Power Index if they have one available, which I hope they do. Sushi, Yearn, and Curve I don't feel much risk. My own personal sentiment, and you'll have your own personal sentiment, and you'll answer how you feel with a choice. Pay for an insurance contract. But are you really going to miss out on 200% yield because you're worried? 178%, and you get a 30% in your power index pools. So it's not for me to make recommendations without my advisor's license, but I'm just mentioning what I'm doing, what I'm interested in, what catches my eye. Let's keep it going. Let's keep it going. John says Alpha V2 no longer offers leverage. Are you interested in a leverage Curve 3 pool? Heck yeah. One, I look forward to the Alpha V2 leverage being re engaged. I'm sure they're doing extensive due diligence and they're resolving their Iron Bank issue with contracts and compensation. So they've done the righteous thing, they've done the right thing, and they've handled it. And those contracts are sophisticated, and I've looked at their source code a little bit. Well structured, modularized, and impressive to say the least. And I would love to know that leverage implementation that they're doing because I probably just do it manually. I just don't understand it for some reason. I don't know how they're achieving that leverage. But that's besides the point. If someone new, now I'm happy to know. Let me know. Let me know. Bull runs in the house. Always a pleasure. Wonka Barrison. Yes. 36 people in the stream, 15 likes. We can do better. So let's go over the charts for 2 seconds, and if you guys have any questions, hit me. Bitcoin looks good, looks solid. I mean, it could do a fat mean regression on the daily. I'm not totally not expecting some sort of large mean regression at some point. I mean, technically, we've never seen a 100 SMA mean regression on the daily since we were at 11,000. So this thing keeps running. We did see a mean regression of the 50 SMA on the daily. Was that January with a little less than 30 grand, but we haven't seen a 100 SMA mean regression. I don't think, we could get a 200 EMA mean regression. I don't think we're going to get a 200 SMA mean regression. I think that's out of the cards. But that's Willy Woo's territory because I don't think we're going to get down to the 20s. And this would be like a serious black swan event. That'd be one heck of a risk off event if we hit the 200 EMA on the daily. Yeah, but I could see a 100 SMA mean regression on the daily to the blue line. Market looks strong at the moment. Look at these guppies, these short-term moving averages. That's some serious downside support. Support. Wow. He says, "Hey Noah, just got in. Are you familiar with Terra Luna, the Anchor platform, stable bar rates? If so, what are your thoughts on the project? Upcoming stable lending tech?" Yeah, it's fascinating tech. I'm not interested in it from a position perspective. It's not something that catches my eye in that regard, but quite interesting what they're doing. That is probably the extent of what I can say, what I should say. Just doesn't interest me. Um, but that's okay. Can't own everything you want to own. You can't even own things you don't want to own. I don't know, whatever the fuck that means. But the point being, it just doesn't interest me from a taking a position perspective. And it doesn't mean I'm missing out. It doesn't work like that. Because if you think you're missing out, oh my God, look at this. You can't own all this stuff. Look at all these assets. You can't own everything you want to own. Picky to choose, quick to sell. Got to find your opportunities. Just because something's cool doesn't mean you have to own it. And when you want to own it, you better be picky. You better be picky. You better wait for a rip to the upside because this thing looks like it's about to breach that little red line. Ooh. So I was picky. I was picky. I think I had a position down here. Let it rip. Probably got about 20% off this bad boy. Got a little nervous when it didn't hold support above the 200 SMA. It was probably out around here about the 200 EMA. Broke down. Watched it rip to the upside. Caught it a little bit above the 200 SMA. But this thing looks solid to me. It could fail. If it go 3 hours, if it breaches that red line and it holds above that red line with the candle body close, that imparts some confluence to me. There's risk. There's a guaranteed loss with dollars, so I'm sure as hell going to take a calculated, intelligent risk, and I'm prepared for it to fall back down to the 200 SMA, especially with the dollar stablecoin protected LP position, which will mute the downside depreciation and also mute the upside with impermanent loss. But along with impermanent loss is impermanent protection. I'm very willing to sacrifice the upside to protect the downside. So instead of 100%, I'm getting 30, 40, 50% on gains. If it rips significantly to the upside, I'm okay with that because impermanent loss is protection. And that's what I want. That's insurance in some regards. But that's the point. Risk mitigation, risk management strategies. Ferdy's in the house. Sensei is 3 a.m. Oh, no, 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 no. Sorry. I was up at 3 a.m. last night actually with an on call alert for one of the companies I work for. An emergency. Yeah. Yeah, it was an emergency. Some serious systems weren't functioning. But anyway, that was my 3 a.m. story. Sonos in the house. Smoothie Finance looks like a nice place for stables. Not of interest to me. Extend due diligence. Analyze your risk. If you can't get an insurance policy on it, that's a little bit questionable. Because it's one, it's named after a food ish, a smoothie. So that alone means I literally have no interest whatsoever. Beefy Finance, Pancake Swap. Absolutely no interest in any of the major food groups. Folks don't take it seriously. Cut, copy, paste contracts. Even I could do stuff like that and modify some parameters. But you know who's not modifying parameters? Who's doing some serious technology and sophisticated logic and algorithms? Alpha. Yearn. Power index. This is not trivial shit. This isn't cookie cutter, incentivize LP positions or whatever the hell. A lot. I could probably even do that. I can't do this right now. I would need to extend a fair amount of education time to figure out how to do contracts like this. Well, I could do it. I've done more complicated things, but it's not something I'm prepared to allocate that amount of time to learn at the moment. Absolutely fascinated by Viper. Not really Solidity, but Viper. I would love to learn it and do more and play. Played around with Python a couple months back. Wrote some Web3 content. No reason I couldn't do Viper. Anyway, um, guaranteed loss may be a bigger emergency. Dollars are a guaranteed loss. You're guaranteed to lose 15% per year. So we need to take risk in order to grow. in order to at least protect against the guaranteed loss. Risk is better than a guarantee. Rather take a risk any day to avoid a guaranteed loss of value, and that's my mentality. Montana, I'm on a diet. No pancake swap for me. Fuck comes up with these ideas? Kids playing games with hundreds of millions of dollars on Binance Smart Chain. What a ridiculous situation. That's exactly what happened last summer in Ethereum, so I can't totally fault them for being completely juvenile. But out of the rubble, in September 2020 emerged some serious tech. Industry titans, some of the smartest people in the room, building financial derivatives. This is a derivative. YLA is a derivative product. Yearn's a derivative product. All right, the LP positions are kind of financial primitives. That's what I would argue. But these are derivatives. This is powerful, powerful tech. I mean, this is really cool because I like the Yearn vaults directly, but I like that this automates it. This is ingenious and it's definitely caught my eye. Mr. Weeby, I hear you know on the food, but also allow for solid work to hide. Your heuristic is best for most, though. Yeah, I can't argue with that. But I need my rule predominantly filters out the noise. I don't care if something is good and I miss it. I need to find one thing, and if there's 10 good things, I can't look at all 10, whether it's named the food group or not. I need one thing. Concentrated bets, as Warren Buffett said. Concentrated bets. So, may miss something, but I don't care about missing something. I don't care for a second about missing an opportunity because there's always another opportunity. And the art of this game is isolating it, finding conviction, finding a good position size, and a good entry point. 3 hours and 45 minutes on this candle. That was a 4 hour candle. It did get rejected, but so that candle closed 15 minutes ago, the 4 hour candle. Let's look at the 1 hour real quick. So, stepping down on the 1 hour, it needs its refueling, hopefully. I wouldn't want it to see it hit the 50 SMA. Let's look at the 30 min real quick. That's a good sign. I like watching the 50 SMA bounce above the 100 SMA, and I like watching the 200 SMA trying to push through the 200 EMA. Huh. And I also like the chop right below the resistance. I don't want to see it, you know what it is? I don't want to see it fall below this dotted red line. Not that I would exit anyway, unless the market had a very bearish tone to it. And how do you get a sense if the market has a bearish tone? You do a 24-hour sort and you see like 10% as the highest gain for the 24-hour sort. Or if you see Bitcoin take a 5% dip, then it's basically risk off for the volatile assets. You know what I'm saying? Do you like DEXTF, Synthetics Index Market? I've heard of it. It's interesting. Not something I would do anything with. You know what I keep saying? Just because I like something doesn't mean I'm going to do anything with it. Sonos YLA is trading at 90 cents. Where do you redeem it for $1? On Power Index, the redeem tab. It's trading at 90 cents, which means where does you see it trading at 90 cents? It's obviously only on Sushi Swap. View pair. So if you want to trade it and you want to buy it, let's say you want to buy it with USDC. %2. Yeah, there's a slippage. So this is why I'm going to mint instead. I don't want to take a 2% hit. So I'm going to mint 25. You look at that. There's just not enough liquidity. This thing is going to be fire. Look at these yields, 1,000%. This thing, I think this is hot. This thing has my eye. 463,000 in liquidity, and they're about to mint a half a mil. Whoopee! This literally, this thing's going to have a mil in liquidity. That's awesome. And the asset is powerful. What it does, it providing 30% yield unto itself, derives derivative based on Yearn vaults. which is based on curve vaults. That's so cool. You guys are throwing some other assets at me, whatever the other these other assets, but that's so cool. That to me, this YLA it's really cool. So there's a difference between something that's interesting, something that's new, something that looks cool, and then something that's so cool. That's really cool, YLA, what it does. And then to top it all off, Sushi is onsen incentivizing the crap out of it to the tune of 170%. Whoa, it drops down to 100% for the month. That's awesome. Um, Keith says, when you were starting out, what risk on strategies did you employ? I imagine as you built your principal, you shifted to these income strategies over risk on. So I've been doing this for years, but 2020, we didn't have the LP positions. So when folks say everything has changed, it's because everything has changed, and I say everything has changed. So this was March 2020. The financial system was collapsing, and I was risk on in a variety of assets. We didn't have LP positions. So as much as I appreciate where you're coming from, saying I did risk on to get to where I am with capital to throw around for yield. We did not have dollar stablecoin paired LP positions back in March last year. They didn't exist. Uniswap had $1 million worth of liquidity on it. I was one of the first LP providers on Curve with WBTC and RenBTC. It was $1 million of capital on these platforms. Now they have $5 billion of capital, and next year they're going to have $50 billion worth of capital. So if right now 2021 was 2020 March 2020, I wouldn't do full risk on. There's too much power in a dollar stablecoin protected LP position. There's too much benefit to risk mitigation. Impermanent loss comes impermanent protection to the downside because we have extremely volatile markets that are highly influenced by the macroeconomic landscape, and we can have systemic liquidity events. So if you're going to be risk on, you might as well be dollar stabilized, which is basically 1 inch USDC or any asset. I'm picking on 1 inch because that's what I'm looking at. But the whole point is when you pair it with a dollar stablecoin, not in a Bancor style pool. You're not going to get this protection in a Bancor style pool. You get impermanent loss protection, which is basically facilitating a full risk on position. So Bancor has its purpose. Bancor actually is the only AMM that does anything of its kind. So it has very much its purpose and it's unique. But the double sided pool where the impermanent loss occurs also offers impermanent protection. So pretty cool stuff. Do you have an idea when Satoshi really is? No idea. No idea, my friend. Bull run, awesome. We'll look into YLA. Due diligence, risk, be respectful with regard to position sizes, and respect the portfolio, and your portfolio will respect you, and get insurance. Protect yourself. Do what's right for your portfolio. What I do for my portfolio is not what's right for everyone's portfolio. It's subjective. You have to make choices. You have to use rationality and logic. And I'll get my financial advisor's license and we'll be able to set up relationships. And that's where probably everything's heading. Would you work on another decentralized project that Jaron Tate may start? I have no capacity whatsoever to work on anything other than barely wake up in the morning and eat breakfast and take care of my girls and work a job and do my YouTube and take care of my financials and participate on Twitter and take advantage of the DeFi landscape. I have not enough hours in the day. For me to work on a project, I would need to take care of my overhead. I remember a lawyer when I was a kid. I went to a patent office, a patent attorney's office, and I remember saying, "Can you help me out? I wanted like 10 grand for a patent." Nowadays, I wouldn't blink an eye, but I couldn't at the time, so I asked for help, and he said, I got to cover my overhead. And I'm like, nowadays, I really understand what he was talking about. So if I was going to really do something, I kind of need to cover my overhead, did you like? Which means foundation gets up to speed, they grab a couple mil, and if I could cover my income and quit my job, great. I'd love that. I like new projects. I like a new job. I don't have any free time. I wish I did. This isn't. It's not the same for me as it was years ago when I did the Android Digibuy wallet. Just don't have the free time like I used to. Keith, I see great. I see great point. Just shows what's going on in the macro scale. Very valuable point. Yeah. So macro could tank everything. They just didn't extend the SLR rule for banks, and they're going to have problems lending. And if they're not lending, velocity is failing. And if velocity is failing, then you got the whole fiasco with what ends up going on with bonds. Long end of the curve looks pretty crazy, and the banks are intricately uh, involved in impact on the bond market, and the bond market could easily tank the equities market. And the equities market, when everything goes risk off, crypto goes risk off, which is exactly why I talk about dollar stablecoin paired LP positions to protect the downside, especially in the case of a liquidity event. There's almost no reason to be full risk on anymore. This didn't exist in 2020. If it existed in 2020, I wouldn't have understood it. That's the whole point of learning and growing, and that's where I am in my capacity to express how to expose yourself to these markets. It's all about risk management. The better you protect your downside, gives a shit if you make a 50% instead of 100% on a trade. Who cares if you make 20% and you miss out on an 80%? Asset goes 100%, but you got 20%. You win. And then you really win if you protect the downside. If it's going up, you're winning. If it's going down, you need to be more defensive. Food for thought. John McGuire appears no insurance on Armor and Nexus for YLI. Okay, there you go. So there's risk. Risk has an implication on position size, and that's how this game is played, my friend. With the complexity of YLI product, biggest risk is probably intricacy, vulnerability, and layered smart contracts. Listen, the nuances and subtleties to smart contract exploits are very sophisticated. Of late, some of the most recent, not pancake swap exploits, but like the alpha exploit was sophisticated. Like these are very sophisticated and very expensive. You know, borrowing and arbitrage, and they're literally exploiting the subtleties of the logic defined in the contracts. In many regards, a lot of these exploits are they're obviously very intelligent persons performing such exploits, and a lot of them are involved in the industry. And a lot of people often say, "Yeah, the only person that could have done that is that guy over there." So that's kind of an interesting reality where it's a small select group of people on the planet that have a capacity to one build these types of the real systems, not pancake swaps, but the sophisticated DeFi contracts. So it's kind of obvious sometimes who does these exploits. It's not like John, who just graduated from college, is going to be doing stuff like this. He's barely going to be understanding how to maybe do a simple contract. Anyway, William says buying BNT and putting it into pools for yield is slightly yes risk than holding a random asset. Well, BNT is risk on. But BNT also is backed by a strong monetary policy. But don't get me wrong, if there's a bond market event, BNT is going to get cut in half. You're going to buy it for 750 and it's going to be $3 when it was 25 cents last year. Food for thought. If you want protection, you pair BNT with a dollar stablecoin and you throw it into a Uniswap pool. If you want full upside exposure, you throw it into the Bancorp pools, and you're going to get full upside exposure and significant incentivized returns. Food for thought. For instance, disclosure, I have B&T and Bancorp pools. I want to be full risk on because my position size is appropriate and the risk is palatable. And that's the way I look at that. It's 5% of my less than 5, about 4 or 5% of my portfolio, my Bancorp position. Small, relatively small. Whispers, so Noah doesn't hear me. Insurance is a marketing tool for these platforms and not worth it unless you're a big boy participant. I mean, listen, if you're throwing in $50, there's no reason to insure it. If you're throwing in 50 grand, you're going to want some insurance in case shit happens. Bull Run Virgin, high yield is risk mitigation rather than naked position, but even better stable pair like the guru preaches. Well, high yield is often leverage, so it's not necessarily risk mitigated. Um, although incentivized yield could be high yield, which is relatively risk minimized. I mean, talking about a sushi onsen pool, there's not much risk there. The LP liquidity pools of the majors of the titans are risk basically minimized at this point. They've been de-risked. You're talking about sophisticated smart contracts that are actually executing automated transactions depending on timing and pool balance and other parameters. There's risk there. So there's risk here with the. Nope, no, I don't want Zoom. So there's risk here. Am I able to stomach the risk? Sure. Is there risk with sushi? Probably not much. Is there risk with Yearn V1 vaults that have hundreds of millions of dollars worth of capital in them? And the contracts are very well structured to the point where it's the same architecture in each contract. So if one's exploited, they'll all be exploited, and V1s haven't been exploited, and V2s have even more capital in them. And it's even better architecture. Scripts.net says, love the title. What was the title of today? A yield starved world meets a demand surge. I mean, there's a demand surge. Look at the yield. The capital's going to come in. It's going to dilute the yield. Being in now is an opportunity to grow. So manage your risk, position size appropriately. Don't get caught up in the FOMO and the hype. Watch for systemic macro events. If everyone goes risk off, you better hope you have dollar stablecoin pairs or maybe just spare stablecoins sitting on the side earning 10, 15, 20%, because that's where you're going to want to be. You're not going to want to be overexposed to Ethereum. You're not going to, Bitcoin is Bitcoin. And Bitcoin charts its own path. It charts its own path. The whole goal is really to outperform Bitcoin. I think that is a valid statement. All right, let's wrap this up. 35 people in the stream, 24 likes. Did pretty good, but we could always do better. Thank you all for joining. March 19th, Friday. I will catch you guys on Monday. I wish you all a wonderful weekend. Tell everyone to subscribe, and I will see you then. Peace.